The fact that they're still showing that many vacancies, which is a record in Canada, is also a sign they're having trouble hiring. And that's in part because people have moved on to other sectors of the economy.
Welcome back to the Midweek Exchange, the show where we break down those big economic issues and explain what they could mean for you. I'm Natalie Nanowski, and joining me today is Brett House, Scotiabank's VP and Deputy Chief Economist. Hi, Brett. How are you?
Hi, Natalie. I got the first chocolate out of my Advent calendar today, so it was off to a good start. How are you?
I'm good. I am a little bit behind, though. I do want to talk to you today about job numbers. So last week we got job numbers for Canada, and it's showing that we have 1 million vacancies in the country. But we are seeing that wages are starting to climb. What is this saying exactly about Canada's job situation?
Well, you're right to point out those two data points because they give us a good temperature check on how the recovery is continuing in Canada. First off, a lot of those vacancies are in service sectors like culture, entertainment, hospitality, and tourism, parts of the economy that have had trouble reopening completely under physical distancing restrictions. So the fact that we see so many vacancies there is a decent sign that companies and small businesses in those areas are seeing increased demand and they're moving closer and closer to being fully back to normal. The fact that they're still showing that many vacancies, which is a record in Canada, is also a sign they're having trouble hiring. And that's in part because people have moved on to other sectors of the economy. And so, that's why in part we're seeing those signs that wages are also starting to move up. Employers are having to offer slightly better pay in order to attract people into those vacancies. And those higher wages, at least according to a survey by the Confederation of Independent Business in Canada, are set to be about 3% up from last year as we move into 2022. So that's a sign that wages may be responding to meet some of those higher prices that we're seeing in the supermarket and at the gas pump.
Right. And inflation is top of mind right now for every Canadian, I think. And the Bank of Canada's inflation targeting mandate is up for its 5-year review. How is this going to affect the average Canadian household?
Well, I'm glad you're asking about it because I know it sounds like a slightly esoteric point, but it's one that has a big impact for all of us. Right now, the Bank of Canada has one job, and that's keeping inflation at or around 2% on an annual basis. And we know from the headlines it's been much higher than that over the last few months. And partly, the recovery from the pandemic, but also those vacancy numbers that you just cited are driving a discussion in Ottawa about potentially expanding the bank's mandate to include, as is the case in the United States, a focus both on inflation and getting back to full employment. Now, we think it's unlikely that it will change quite as radically as the dual mandate in the US suggests. But if the inflation targeting mandate were to be softened or to have a jobs target added to it, it would probably mean that interest rates are on hold a little longer than would otherwise be the case next year, and inflation might run a little higher and a little longer than we'd otherwise forecast.
That's definitely a change we want to look out for if it does happen or even close to it. Now, looking ahead for the next week, what should we be watching for there?
Well, we have a really interesting set of data coming out on Friday around the national balance sheet and how household finances are continuing to evolve through the end of September in Canada. During the pandemic, we saw a big run up in aggregate savings and household debt pushed down and then refinanced away from commercial debt into mortgage debt. And so we're going to be looking to see if those trends have continued and provide a further basis for the recovery continuing into 2022.
Thanks so much for that, Brett.
Great to talk with you, Natalie.
Great to speak with you too. And the Midweek Exchange will return next Wednesday.